Well, good morning. Happy Monday. It's July 29th. I want to bring you the latest data here in the Austin metro area. We're going to start looking at some June data. Then I'm going to talk about where we are currently on interest rates. And then we'll look at some current up to date statistics for late July. Let's start with June. So, this is the latest chart we have out for June. This is closed sales, not price. But what it shows you is that we've really had an anemic year in terms of sales activity, at least compared to the last 4 or 5. This goes all the way back to 2020. But even in the spring of 2020, pre COVID, we were selling more properties than we're selling now. And the higher rates that we saw kind of hit the market in April and May has really slowed down buyer activity. So, where will this, end up? It may not go in a straight line down. Like all these years, there tends to be a little bit of a fall bounce. And then it'll slow down as we get into the winter. So I expect we'll see a little lump up here at some point, maybe late summer or early fall, a little bit more in sales. But then I think we'll see that steady decline. So will we end the year with fewer sales than we have in the past 5 years? I think right now, very clearly, that's going to be a yes. The only thing that may impact that is, of course, if rates come down low enough that they can encourage more buyers to come into the market and shop, maybe that will trend back. But I think for now, we're on pace to have fewer sales than we've had in the last 5 years. There was an article that came out nationally last week that said in June, the United States had fewer pending home sales than at any point in 20 years. So that even includes the Great Recession. So there's a lot of buyer fatigue out there right now. If we look at units sold, we're down about 15%. Average sales price down about 5.3%. Days on market up a little bit from last year, but we were already kind of higher on days on market. And median sales price down about 6% from this time last year. So the market is continuing to soften a bit. In the last week, this is the week of July 14th through July 20th. Listings were down about 10%. I think sellers also are getting a bit fatigued with the market. Sold listings up a little bit, about 4.5%. Months of inventory still climbing towards 6% for the total market. We're sitting about 5.4% there. Median sales price about 4.37%. Hang on to that number. I'll show you a chart in a minute that has to do with the median sales price. And then in terms of the last week, about 15% of active listings had a price reduction. Completely common when you're in a market with a lot of inventory, not a lot of buyer demand. You've got to do what's necessary to get buyer activity into that property, and price by far is the biggest marketing weapon that a seller has. So if we come down here and look at year to date, this is January through June 30th. So think the entire first 6 months of last year blended against the first 6 months of this year. So sales are down about almost 2%. Average sales price down about 1%. Days on market up almost a week. And median sales price down about 3%. So if you blend the whole year together, it's not that different. I think what we're seeing in the latest few weeks is it's starting to a little more pull away from last year on the downside. Again, just because of some of that fatigue, higher inventory, and the rates have stayed high. If we look at active history, don't know if you can see all this. Let me see if I can zoom that up a little bit. There we go. But if you look right here, right now, we're sitting about 15,000 plus homes for sale. If we went down into the pandemic at this time, it was about 3,500 homes for sale. So we've got, 7 or 8 times as many homes for sale right now. And pendings at any point in the last 13 years, we've never had below 3,000, and now we're sitting around 2,600. So fewer home sales, more inventory. That's kind of the high story right now. Let's look at interest rates because this story is changing. Let me zoom you back up here. So right now we're sitting about 6.86%. That's kind of your par rate for the 30-year fixed. Obviously, if you're VA or FHA, you can get a little lower. And as I've said in previous weeks, if you're a well-qualified buyer and you have great credit, primary home, you're putting down a good amount of money, you're probably in the mid sixes right now for your interest rate. So what's happening with rates? Well, the inflation data continues to come in. It continues to tell a story that inflation is cooling. And more importantly, we're starting to see some cracks in the economy. It's still solid, but we're seeing cracks in terms of jobs, in terms of consumer sentiment, in terms of the savings rate. There's a lot of things that are kind of warning signs, yellow flags, that things could be getting weaker. And so what's happening is they're starting to reflect that in rates. Let's come down here to the 30-year fixed chart. So this is looking back to April when we started kind of the peak months of the spring. And you can see rates shot up quickly from 7 to 7.5%. And it just crushed the spring market. It just took buyers out of the market. They weren't interested, stayed that way through most of April. It started to come down and kind of fight that 7% range for 2 or 3 months. Again, stayed above 7. Finally, the last 3 weeks or so, we've been able to crack below 7%. But of course, everybody's on vacation. And so people really aren't paying that much attention to it. We'll see if it helps a few buyers as we get into the fall. And I think if the stories are correct, maybe by September, we'll see the Fed make an announcement that they'll make a small rate cut. It's not going to affect maybe mortgage rates or borrowing that much, but what it will affect is psychology. And so if more buyers think, hey, finally, rates are going to come down, let's go shopping again, you might see some more activity in the market. So this is right now current data, number of active versus sold listings. So the green is active single family homes on the market at any one time. And the blue is closed sales for that month of single family homes. And so if we look last year, we really peaked out in September. It looks way lower than now, doesn't it? I mean, we thought it was high inventory last summer, and we're way higher now. And so you can see it always kind of drops off in the fall and winter. Either a home sells or sellers take their home off the market. But then we had this massive spike in inventory this spring. A lot of it was because of those interest rates. The reason the inventory builds up is there aren't as many buyers buying it. And so homes stack on top of each other. And so what happens is we've peaked out this year. This is just single family homes, around 13,500 homes. In June, we're down a little bit in July. And I think maybe we're starting to round off on inventory. I said last month, I thought June would be the peak. We're kind of still trending there, but we got to watch sales. So sales kind of, meagerly went up through about May, but they've really dropped off lately. And so it's not just because of rates. I just think there's some malaise in the market as well. And of course, in summer, a lot of buyers just go on vacation or decide to wait till the fall. They just put things off. And so what we're seeing is a drop off. We will have July go up. We haven't closed out the month of July yet. So I do expect this will come closer to our June level. But we had about 2,700 single family home sales in July. That's really weak, in June, when you think about that we have 13,500 homes for sale. So the easiest way to think about it is if you are a seller, you have about a 15, maybe 20% chance that that home will get a contract in any given month. That's what we're looking at in the market. 80% to 85% of sellers will not get a buyer in a certain month. And so it's got to be really well priced, attractive, interesting, maintained well. Any little defect a buyer can use as a reason to not want to move forward. And I can tell you in our conversations with buyers, we're feeling that. So let's look at historic sales price trend. So this is going all the way back to the peak of COVID. You can see how fast and aggressive the price was in the spring of 2022, kind of peaked out in the summer. By then, the Fed was really rapidly increasing rates. We had a massive fall off in the median home price through the early part of 2023. Since then, I think about it as like ripples. When you drop a pebble in the water, the first ripple's big and then the second one's a little lower and then the third one's a little lower. We're kind of dealing with that. So we're still facing a lot of those issues, but the big drop was in 2022 to 2023. We did go up in median home value in the spring. And then of course, last year we had high rates, buyer fatigue, and the market went down below where it started. So we had a little bit of depreciation last year. Same thing this year. We've had median home values go up, but not as steep, steep, not as steep, even less steep. So, the ripples are just getting smaller, but we are already starting to see just that malaise, that median home value. It's going to start to trickle down between now and the end of the year, unless there is some catalyst that changes that story. So if you are a seller right now, it is a imperative that we price aggressively to attract buyers, that we do what we can to make sure the home shows its best, and be honest about the market and what it's going to take and how much time it's going to take to get a buyer into that property. If you are a buyer right now, you actually have some pretty good tailwinds for you. You've got interest rates starting to get a little better. You have sellers that are eager to work with you, and you have a lot of inventory to look at. And so there's always a trade-off when you're a buyer. Do you want low interest rates? If you do, you're going to have a lot more competition. If you want less competition, you might have to deal with higher rates right now. So use that as your barometer to decide what you would like to do in the coming weeks and months. Anyways, if you want to keep up with all these videos, make sure to check out our YouTube channel at Ryan Kelly Group. Click that subscribe button and you'll get our videos each and every Monday. And of course, if you know somebody looking to buy, sell, or invest in Austin, or even just want to talk about the market, we would love to hear from you. Anyways, hope you are enjoying the last week of July. We'll be turning into August here later this week, actually, I think on Thursday. And so I'll talk to you again in August. Talk to you soon. Thanks.